Imagine a company that knows every bolt, every battery cell, and every secret contract in the global car industry. They are the intelligence agency of the automotive world. But in 2025, they did something that looked like financial suicide. They purposely let their profits drop to build a digital brain. Today, we're cracking open the vault of MarkLines to see if this is a genius pivot or a $40 million gamble. First, let's talk about their moat. MarkLines is the Bloomberg terminal for cars. Nearly 5,500 corporate giants, from Toyota to Tesla, pay them just to keep the lights on. That's 500,000 professional users. In plain English, if you're building a car and you're not on this platform, you're basically driving blind in a thunderstorm. But here's the twist. While everyone else is chasing growth, MarkLines' profit just took a 5.4% hit. It's like a healthy athlete suddenly losing weight. Is it a disease? Or are they just training for a marathon? They've spent millions moving to Roppongi and hiring AI geniuses in Shenzhen. They aren't losing money. They are buying the future. Is the engine still running? Absolutely. Look at the gross margin. That's essentially the money left over after the bills. It actually climbed to 66%. For every dollar they bring in, 66 cents is pure oxygen. The profit dip is just accounting noise from their big investments, not a leak in the tank. Now, for the elephant in the room. Their teardown business, where they literally rip cars apart to see how they work, crashed by 38%. Why? Because their old partners are moving out, and MarkLines is building its own garage in Atsugi. It's a risky do-it-yourself move, and if they mess it up, they lose their most valuable data. The map of the car world is being redrawn. Japan is retreating, spending 4.5% less. Meanwhile, North America is surging by 14%. The old guard in Tokyo is tightening their belts, while the new tech hubs in the West are hungry for data. MarkLines is following the money across the Pacific. If you want to see the future of EVs, you go to Shenzhen. MarkLines just set up a nerve center there. They are tracking 70,000 Chinese suppliers in real time. Think of it as a spy satellite hovering over the BYD supply chain. This isn't just data. It's a survival kit for the rest of the world. For 20 years, MarkLines didn't raise their prices by a single cent. Then, in 2025, they finally pulled the trigger. This is the ultimate alpha move. They are testing their users. Are we a luxury you can cut or a necessity you must keep? They actually lost 140 clients this year. Usually that's a disaster. But look closer. These were small, low-value parts makers. MarkLines is basically cleaning out the garage. They are losing the dollar store customers and replacing them with high-value tech giants. Quality over quantity, every single time. Why is the rent so high? They moved their HQ to Roppongi, the most expensive dirt in Tokyo. Why? To attract the best talent. You don't build the world's best AI from a basement in the suburbs. This is a flex that costs short-term profit but buys long-term prestige. Let's check the grain in the barn. Their cash flow is 1.19 times higher than their reported profit. In the real world, that means they have a mountain of cash sitting under the floorboards before they even do the work. No debt, pure liquidity. This company is a financial tank. How efficient is their money? Their return on equity is 23%. To put that in perspective, the average Japanese company struggles to hit 10%. Even in a bad year, MarkLines is twice as efficient as everyone else. They are turning every dollar into 23 cents of pure value. They aren't just hoarding cash. They are sharing it. They paid out 45% of their earnings to shareholders and bought back millions in stock. It's their way of saying, trust the process, we've got plenty of fuel in the tank. Here is the big bet, MarkLines AI. Forget ChatGPT, that's just a generalist. This is a specialist surgeon trained on 2 decades of private car data. It's unscrapable, unhackable. And starting in 2026, it's going to be the secret weapon every engineer uses. Why can't a tech giant like Google just copy them? Because MarkLines has the physical proof. They combine digital data with real-world teardowns. It's the secret sauce that keeps 5,400 companies locked in their ecosystem. Once you're in, you can't leave. The map for next year looks aggressive. They are aiming for 10% revenue growth and a 12% jump in profit. They expect the price hikes and the AI to start paying off. They've finished building the rocket, now they're just waiting for liftoff. But we have to be honest, it's not all sunshine. We're watching their research spending very closely. If they start hiding losses inside software assets, we'll be the first to call them out. There are risks in China and risks with their partners, but they have a plan for each. So what's the verdict? MarkLines is a defensive growth play. It's a safe house in a storm, but one that's secretly building a jet engine. 23% efficiency, zero debt, and an AI pivot. It's a transition year, but the foundation is rock solid. 2025 was the year MarkLines stopped playing it safe and started playing to win. They traded a bit of today's profit for a lot of tomorrow's dominance. The intelligence agency of cars is about to go digital first. If you want to go deeper into the numbers or need a custom audit for your own strategy, HDIN Research is your partner. Drop us an email or visit our site. Don't just watch the industry change. Own the data that drives it.